So is Tesla a good stock for overnight swing trading? Tesla is certainly a well-known and volatile brand, especially with its CEO being Elon Musk. Of course, you may very well be familiar with the Tesla car. However, they're much more than that. They're also solar panels and solar roofs and power supplies. And of course, coming to you soon, the Tesla robot to help you around the house. When looking for companies to trade overnight, we're generally looking for stocks that have high IVs, and Tesla certainly fits the bill. Tesla is certainly a volatile stock with an IV sitting around 38, which is high but not extreme. Our sweet spot for our type of trading tends to be between 20 and 30. However, that's mostly for ETFs. We need to take a look at each stock individually to see if it can work well with our system on its own merits. When we look at this chart and base it off of the SPY-TB trade, we see if our indicator is wrong, the stock will need to move at least 2 3/4%, and that doesn't include the theta. This option chain is about 8 days until expiration, and with a theta of around 36%, if you buy 2 options, you're looking about losing 75 cents overnight. So that's a consideration in this process. Another consideration for an overnight swing trading stock is volume. We want high volume because we do not want to get stuck in a stock when the market's running. We want to be able to get out when we want to get out, and Tesla is certainly a high volume stock, including the options. So that is good as far as Tesla is concerned. Another consideration for an overnight swing trading stock is the bid-ask spread, and because Tesla is a high volume stock, it's not too bad. It's only about, on average, maybe 5 cents. So that means you're not losing a bunch of money just by buying the option, which can happen when there's a large spread. So for an overnight swing trade, we buy at the end of the trading day based off of our signal, and we use the spytomorrow.com signal, which is free on the front page of Spy Tomorrow at 4 o'clock Eastern Standard Time. But we have to remember this: the Spy Tomorrow signal is based off of the SPY, the general market. So you have to be sure that Tesla is going to follow suit. So take a look and see over the past week, has Tesla been following the market? If it's up because the market's up, or down because the market's down, or is it going rogue? And if that's the case, it may not be a good overnight trade at this time. Over the long term, the Spy Tomorrow algorithms have been correct about 75 to 77% of the time. But remember, this is based off of the SPY. So you may want to use other signals when it comes to individual stocks like Tesla. If it's not running the same as the market's been running, you may want to look at maybe oversold or undersold RSI values, maybe money flow, perhaps the trend of Tesla at the end of the trading day, or maybe even news. You might want to try different methods to trade overnight. But remember, they're a little more riskier. The good news is that Tesla is a big part of SPY and the QQQ. So you could trade SPY or QQQ rather than Tesla, but of course it's going to be a different type of a move and a little bit different feel of a trade. Because of the high volatility of Tesla, even if our indicator is correct and we're doing a SPY-T style trade, we're probably going to need a move of at least 0.5 to 0.6% to actually start to make money. Now, it could be less than that if you do a directional move, but of course with directional, that means you could lose a lot more of your money overnight. A traditional SPY-T trade is a 2-to-1 options ratio, and we have a number of them. The SPY-T A trade means if the indicator said up, we'd buy 2 calls to 1 put. But we have the SPY-T B, which means we'd buy a call just in the money and a put at half price. A SPY-T BQ would be a call just in the money and a put a quarter of the price. Or we can split the difference and go with the SPY-T BT trade, which is a call just in the money and a put 1/3 the price. If you're highly aggressive, you're going to buy expirations 4 to 7 to 10 days out. If you want to be a little more conservative about it, you can look at 2 weeks or 30 days out for your options expirations. You always have to remember the buying is easy. At the end of the trading day, you buy your Tesla calls and puts, and then in the morning you sell. But that's where you really make the money. Because if you're buying calls and puts, and we know the volatility of Tesla, hey, perhaps it's going to go down. It just depends. So your indicator says up, you sell your call and watch it go down and then sell your put. The name of the game is to maximize profits and minimize losses. And it's a lot harder with high volatility stocks. Of course, it's about risk and reward, and Tesla certainly fits the bill of high reward. Tesla is certainly a fun stock to trade, especially due to its high volatility. When you win, you can win big. However, when it comes to SPY-T trading, because of the high IV, it's going to take a much bigger move when your indicator is wrong. If the indicator says up and Tesla goes down, you're going to need almost 3% moves to actually make your money back the other direction. So that means in most cases when your indicator is wrong, you're going to have to mostly focus on management to minimize your loss. Don't work to try to make the money back. Save that for the days in which your indicator is correct and your gains are outsized compared to your losses. I'll see you in the next video.